Wow, Korean Chris, you're so fast into the video. Thank you so much. Okay. Yep. So this is where I quickly let everybody know. Okay. All right. Good evening, everybody. Okay. Good evening, everybody. I just want to make sure that my video is live right now. Good evening, everybody. Okay. Wait a minute. Okay. I just want to make sure I can see it. And let's go. Okay. Now. Good evening, everyone. Wow, today a lot of people come in early. Thank you, guys. Yeah, thank you, guys. Did y'all get an alert on Telegram? That's how y'all get to come in. Yeah, thank you so much. Thank you so much for coming in. Yeah, 1 hour a minute. I try to stop this live stream by midnight. How about that? Depending on questions, because I'm behind my steps today. Today, wow, strong man. Today I only clocked 8,700 steps. So I'm a big disappointment. Really good to see you. So I'm a big disappointment to myself. So I usually got 15,000 steps, but today was just too strong. Yeah, too tough for me. Mr. Tang, good to see you. Wow, long time no see, Mr. Tang. Mr. Tang, everyone is asking about Hong Mei Ren. What should I do now? Okay, but anyway, good to see you, Mr. Tang. And we've got Yok Chin, Nixon, and everybody. Okay, today I will talk really. I'll talk about the actual firing of the shots during crash buying. So I thought this is like the most important. Coming soon, very good. Okay, actually I missed the Hong Mei Ren orange myself. Actually, the other one I miss a lot is the cherries, the black diamond cherry. Wow. Okay, my only fear is that I put on too much weight after that. But anyway, yeah, Chilin, good evening to you. Okay, yes, patient. I got no rush for it. Okay, yeah, I got no rush for it. Really, no rush for it. Okay, so everybody, please give a thumbs up. As usual, 300 thumbs up, I will start the video. 300 thumbs up, I'll start the video. Okay, everybody, please hit 300 thumbs up. I only got 51 thumbs up. 300 black diamond coming soon. Thank you. Okay. So at 300 thumbs up, I'll start the video. I only got 50 thumbs up now. Come on, guys. Okay. Yes. Shirley. Good to see you, Shirley. Okay. You got Japanese name. How I pronounce? Okay. Very good. Okay. So take note. Today's video, because of the sensitivity, I most likely won't keep the video for too long. This will be the one shortest. Please go and watch it as soon as possible. Yeah. Just go and watch it as soon as possible. I actually delivering the firing mechanism of how I do it. There are idiots. I use word idiots that will consider this. Anyway, I shouldn't talk too much about it. But anyway, please hit thumbs up. Okay, 300 thumbs up. We'll start. I got 100 now. I thought the first four lessons was very good. Okay, if you have missed it, I think if you come to my YouTube channel, oh yes, my YouTube channel, I must better flash my YouTube channel. You come to my YouTube channel, actually there are people who actually wrote, there are actually people who wrote summaries of it, which I thought was very good. Okay, it's not as good as the man delivering it. Oh goodness. So for people who have not subscribed to my my Telegram channel, please subscribe to the Telegram channel. Okay, Lucky Eggshell, if you want the premium more super ginseng peel, I will give you the number to look for it. Okay, yeah. So you just, I think I spelled inquiry wrongly, but never mind. You just WhatsApp this number for the ginseng tea. Okay, but wait for 300 thumbs up. I took a long time to develop this deck. Okay, for Telegram channel to my 1865 channel, you all just subscribe to this. Okay, and now YouTube. Nowadays, the YouTube notification very difficult. So I'll at least put it up on my Telegram channel. How about that? Okay. Yeah, everybody give a thumbs up. The way to give thumbs up is not to give thumbs up here. There's the actual way of giving a thumbs up. You go to the YouTube channel right now. There's a thumbs up here and hit thumbs up like that. Okay. That's the only way. Then YouTube will propagate the video for us. Yeah. Actually, no, 269 or something like that over for 200 over views, something like that. Okay. Yeah. So yes. So thank you guys. So the first four videos, I first talk about. Okay. I first talk about the preparation. Then I talk about the living. Then I talk about the living index. Okay, and so on. And then let me see. Okay, everybody in already? Not give me a minute. Okay. Okay. Yep. Okay. Yeah. Okay. Yeah, the living index. Okay. Then how to overcome emotional fear and things like that. And finally, today we actually go into actual firing. The actual firing has two videos. Yeah, I'll talk about actual execution first. Then there'll be a few more sessions to go. It take a long time to develop this kind of syllabus. Okay, now I will turn off that banner. Okay. All right. Okay. 354 of you. I need everybody, not some of you, everybody to give a thumbs up. So I got 175 thumbs up. Okay. The earlier you all give a thumbs up, the earlier we start the video. I also want to sleep. Okay. Tomorrow, yeah, this last few days of December, every day I'm swamped by lessons that everybody try to rush to use the Skills Future voucher. So I do until I face them blue. Okay. So please, everybody please give a thumbs up. Okay, I have 180 thumbs up right now. Anyway, the other question I always want to ask everybody, what's stopping people from giving thumbs up? Okay, what's stopping from giving up? Why don't you all give thumbs up? I don't know. Yeah, because your thumbs up help other people to watch, not to give me affirmation. I don't need that. Okay, yeah, your thumbs up help other people watch. The faster you hit a thumbs up, faster we can start the video. Okay, yeah, so 342 of you. Yeah, it's what's so difficult? Give me just press one button only. What's so difficult, right? Yeah. So okay, now we have got 193. I have another 100 more. Okay. Today's lesson is the lesson everybody is waiting for: how to actually fire the shots. Okay. Thank you, Willie. Okay. How to actually fire the shots. Yeah. So the shots firing is a most critical one in actually delivering the blow. But I also need to remind everybody while I wait for the thumbs up to come, is that if you do not do the preparation work, then the actual firing, you're chicken out. Okay. So I've spent a lot of time talking and teaching everybody about preparation work. So here I want to ask everybody, while you learn this, don't forget about the preparation work that is needed. Okay. Yeah. Any question on the previous session while wait for people to thumbs up? So I got another 75 more thumbs up to go. I have 225 right now, 300 thumbs up to go. I also want to start early, guys. So help me with that. Okay. Yeah. So firing during a crash is scary, like jumping off a cliff. Yes. That's why the preparation work is important. Remember, I share everybody. That's why you must be armed with a heavier hammer, and a hammer that's increasing, so that when it's ready to slam, you slam. Okay. Yeah. So I've got another 70 more thumbs up to go. Everybody, please give a thumbs up. You're 366 of you. I don't understand why people don't give a thumbs up. Okay. Yep. Like the earlier you give a thumbs up, really I can start, and then earlier we can pangkang also. Okay. Yeah. So how this motivation of this crash buying series come about is because of Tom Lee actually saying that a 20% crash will come next year. Okay, I don't know whether what he says is true or not, but so far what he says is almost true, not 100% true. Okay, I'm still waiting for the 7,000 S&P 500. Okay, yeah. So now, if indeed that it come, I want to make sure that I'm ready. I don't mind sharing everybody that. Okay, yeah, I don't mind sharing everybody that we all be ready. Okay. So 245 thumbs up so far, another 55 more to go. Okay, and we can all start. Okay, yeah, please help me in that. Don't waste time, guys. So just quickly hit a thumbs up. Yeah? It's just like me going to the US economy is quite bad. No lah, I don't think so. Okay, the US economy is very strong. The crash is most likely coming from some policy shock or policy error. That's what Tommy says. I think so as well. There's a good chance of that happening. Xiu Qing, good evening to you. Give a thumbs up. Really appreciate this. Okay. 257. Okay, I have 53 more thumbs up to go. Oh, another 30 more thumbs up and we can start already. Okay, 30 more thumbs up. Yeah, you see, as you can see, as you give thumbs up, the number of viewers will increase. So to help other people not to miss this one, please do this. I will delete this video. I will delete this video. Okay, for sure. Okay, this video is the most sensitive of all videos, so I have to purge it. So so everybody, please watch. Okay, I have another 31 more to go, 21 more to go, 21 more to go. It's like Palma like that. Come on, guys. Okay, Coco, good to see you. Mama Bear, good to see you. Okay, Weekend, good to see you. I'm live right now. Okay, so Aspen Files, no lah. I don't think anybody care about Aspen Files. Okay, yeah, I don't think so. Okay, yeah, I don't think so as well. Okay, so while the are waiting for the last 20 people to go, I shall now make the entire screen. Okay, share now, guys. Okay, I'm still waiting. I wouldn't start until. Okay. Now, how do I do this yesterday? This one, this way? Yeah, a lot of people want to see the words in full. Okay, another 10 more to go, guys. 10 more to go and we can start, okay? Okay, it's called actual crash buying, okay? I took a long time to develop this deck. Long time to develop this deck. It ain't easy, okay? So, all right, let's start, shall we? So today's lesson is about actual crash buying, the art of actual crash buying. And to be frank, my crash buying techniques have evolved over the years. And I think it's important to now go back to first principles, how I first started. So I first started in 2008, and then 2008 global financial crisis, 2012 Europe debt crisis, and 2015 China market crash, 2018 trade war, 2020 COVID crash, 2022 great inflation, and so on. Each of them, I actually deploy different methods. So I have to go back and think through how I deploy the crash buying and things like that. So I've evolved, but I think I go back to the first principle and share with everybody what I think is the best way. Okay. So number one is that the first and most important note, and please continue to give thumbs up, guys, is that to win in a crash, you don't need precision. Okay, a lot of people think that you need to buy right at the bottom. Okay, if you don't buy bottom, you lose out and things like that. Well, crash buying is not about precision. It's about tahanability, survivability under fear. Okay, because in a crash, it's really very frightening. I don't think I've ever successfully caught the right bottom. Never once. Never once. I've caught around the bottom, and most of the time is I fire a lot, then slow down and everything. So I actually fire a lot in the bottom, but it doesn't mean that I don't fire around the sides. So this is about reminding everybody that to win in a crash, you really don't need precision. Okay, stop thinking that you need to know exactly when to buy. Okay, that's a axiom number one. That's a rule number one. And this lesson is important, okay? But I must say that the important lessons are the earlier ones. It's about preparation, right? What do you do to prepare for the crash buying? You don't prepare a financial safety net. You don't get ready a dry powder, and you don't get yourself psychologically ready, okay, with a heavier hammer concept, okay? Then by the time the crash comes, you weren't there to buy, man. If you don't understand why the S&P 500, the NASDAQ, and so on are living index, you have no confidence to buy. So actually, the more important lesson are the previous one. Okay, the current lesson is actually delivering the crash. So most investors actually know when the crash happened. Everyone will know when the crash happened, right? So when the crash happened, everybody, even I think even I don't know, grandmothers and grandfathers will know when the crash happened. Why don't people buy? Because everybody fail on execution. Because to execute under stress is very, very difficult. Okay, very, very difficult. So in terms of execution wise, what's the reality? Well, the truth is, don't do anything, feel safe. That's why people don't do anything. They just freeze. So become paralyzed, right? Paralysis, there's an emotional pull towards paralysis when there's a crash happen. And and a lot of times when you do something feels very irresponsible, right? You feel that, if you buy now, you're very irresponsible because you're taking such a big risk. Your family may lose the money, you lose the money or whatever, right? So, and everybody want to wait for certainty. I want everyone to make for sure. I know that now everything is okay. You tangku ah. When everything is certain already, you think that the market will still wait for you guys? Okay, you agree with me? The confirmation is near impossible. Okay, confirmation is near impossible. So I think that it's important for everybody to realize that confirmation is impossible. Okay, so I I think the biggest fear is what they call a fear of catching a falling knife. Okay, there's a lot of people that are very fearful of catching a falling knife. So I think that everybody just fear that when you buy, you lose more money. You buy, you lose more money. But crash buying, for sure that will happen. For sure that will happen. Okay, for sure you'll catch a falling knife. For sure, as you buy, most likely you're going to lose more money. You buy, you lose more money. You buy, you lose money. It for sure happen. So the earlier you get in your mind that for sure you lose money as you buy, then the better, the more ready you become. Okay, so now I've got a couple of crash buying techniques that I would like to share with everybody, but every one of them will demand emotional mastery. Right? It's not a matter of conquering your having head knowledge. Crash buying got nothing to do with the brains. Nothing to do with the brains. It's all the heart. 99% the heart. Okay. So why most people chicken out is because they fear, right? And these are the realities of what happened. Would you agree, guys? Okay. So meanwhile, please continue to give thumbs up so other people get to watch it. So let me share with you a very important thing as well. Let me take a drink. It is okay to miss out totally on a crash. It's not a failure. You do not need to catch every crash to build wealth. If you're not confident, not ready, or the circumstances were against you, you needed the money and whatever, right? There are issues like, for example, you're armed with dry powder. Suddenly, when the market crashed, one of your, I don't know, I mean, sorry, let's say suddenly your car need to renew or something, or you suddenly have some big expense, there's a medical expense or whatever, right? It's okay, right? You do not need to miss out on every crash. You need to catch every crash. It's okay to miss out one or two opportunities. It doesn't disqualify you. So, when you are unprepared and you execute it, the chances are you lose money. Okay. So when you miss out an opportunity is perfectly okay. Okay. Perfectly okay. When you lose money is not okay. Okay. Yeah. So I want to stress that. So I think it's important to know that crashes come very regular now. Super regular. 1-2 years you crash once. Every 2 years you crash one. Every 2 years you crash one nowadays. Okay. So you miss one doesn't matter. Another one come. Meanwhile, whatever you bought, let it continue to compound, right? So what you do want to do is to act unprepared. Now that you know what it takes in terms of being prepared, and yet you are not ready, you take more time to arm yourself with a financial safety net. You take more time to prepare. You take more time to prepare the dry powder. You need more time to understand, the doctrines of it and things like that. You're not ready yet. Don't fire, right? You lose money, right? 100%, okay? 150% you lose money. If you are not ready and you fire, you lose money. Even if Mr. Lu tells you fire now, fire now, fire now, but you're not ready, you lose money, okay? So, and if you make some major mistakes, some of this mistake takes years, maybe decades to recover. So the goal is not just simply to participate quickly in a crash. The goal is to stay alive for every future crash, okay? And hopefully you can fish, some of this bottom, okay? So continue to give thumbs up, please, guys. So there are multiple crash buying methods, a lot. I research and I also experience different methods. Actually, they don't differ by brain power. It's not about how smart each method is whatsoever. Is by three critical method, okay? how difficult it is to execute. Okay, you may know the method. I tell you, if the VIX index, this the fear and greed index, if the VIX index hit this certain point, you must buy. 99.9% won't be able to do it. Okay, won't be able to do it. So and the other one is a lot of people have a lot of errors in this kind of crash buying methods, because some of them are just very difficult to execute. And the other one is a lot of them just require a lot of emotional gut strength. Okay, and it's really very difficult. For example, okay, I give you an example. Okay, there are a lot of people who just cannot break up, right? They are in the wrong relationship. They just cannot break up. Have you seen this kind of relationship before? I go tell the guys who got hooked up with some China woman or some Vietnamese woman, and their wives are heartbroken. It's very difficult for these people to break up. Why? Because the emotional toll is very high. I'm just saying, right? Emotions control the human. Okay, let's understand this. Right? So it is not easy to overcome the emotional toll. All right. Okay. So I'm going to share with you 3 types of crash buying techniques. The first one, I use it more in the earlier days. The second one, I use it more in the recent days. And the third one are textbook case. A lot of people use them, but I think the error rates are very high, but it may be suitable for some of you. So I myself share it, okay? So I'm going to share 3 methods. I'm not saying you should use any of this method. I'm just saying I use this method. I found them to be very useful from experience, and some of them are quite easy to execute. If you have got your preparation work done, some of them are more difficult. Okay, so it really depends on individual. Okay, and I've got continue to give thumbs up, please, guys. Okay, so the method one is what I call a low error rate. It's a spread out method. It's a mechanical methodological. Well, I don't know how to pronounce that. Okay, method. Second one is what I call skills-based, analysis-based method. And the third one is what other methods are in the market. So the first method, we have the lowest error rate. Very difficult to have an error in this method. I'll share with you the plus and minuses. The second method is skill-based, is high reward but high error rate. Third one is generally high error, difficult to execute. Okay. So now the first method is what I call the spread out mechanical method. Okay, pretty easy to execute, and it's my preferred method actually in my early days. So is guaranteed participation without the need to break emotionally. So this is what I think 101. Okay, I think everybody, if you want to try, should try this method first because it's easier. It removes guesswork and protect against paralysis. Okay, now this method is actually quite easy, right? So whenever the market crashes, especially initially, okay, you take a small position first. So the smaller the crash, the smaller the position. The bigger the crash, the bigger the position. That's all. As simple as that, right? So what I would do is before a 10% decline, don't buy. Just don't buy, right? Don't buy. Okay. But unfortunately, this method will miss out all the crashes between 0 to 10% crashes. So after 10% crash, then you take a small position now. Small. Okay. Small positions. Okay. Maybe every 2.5% decline, you trigger another shot, or every 5% trigger another shot. I prefer 2.5%. You trigger another shot, 2.5% trigger another shot. But the shots get increasingly bigger as the crash deepens. Okay, so maybe as a minus 10%, 15%, 20%, as you hit 20%, your position should get large already. 25 to 30% crash are very, very rare. Very, very rare. Okay, very, very rare. Not say don't have, very, very rare. So, so I would suggest that, as you go down, this is a portion that you go in. Now, what you go in will depend on your comfort level. Okay, so there's no right or wrong in this it really depends on it. And I'll share with you how I split up between the two methods. So this is my earliest days. I use something like that, and it's most logical, right? Yeah, so small crash, I fire a small shot first. Bigger the crash, the bigger shot. The bigger crash, wow, now it's almost like bloodbath already. Boom, long zhong hui si. Makes sense, right? Okay, very simple, very logical. Now this one is easy to say on paper. Haha. Execution-wise, do you think how difficult it is? Very difficult. If you don't have your preparation work done, okay, you will be hit very, very painfully. So make sure that you got your preparation work done ahead, okay? Financial safety net is paramount, and then arm yourself with a heavier hammer, and the hammer must get heavier along the years. If not, when the market comes, you won't dare to fire. Okay, Colin, good to see you. So again, this method very simple. Minus 10%, fire a small position, 12.5% another position, 15% another position, 20%. As you get bigger, you fire bigger. Let me repeat again, okay? Crashes above 20%, especially 25 to 30% are very, very rare. Very, 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 very rare, okay? So don't hope, everybody say, oh, I wait until 30% and buy. Then you will never happen. Not saying never happen. It may not happen for a very long time. Okay. Yeah. So I think this is the easiest method to execute. Every 2.5 to 5%, you fire one shot, and the shots gets bigger and bigger and bigger. Now, what happens? Wait. What happens that if you after fire already, all dry up already, the market still continue to crash? What happened, guys? What do you do? I wait for answers, okay? See whether you learned the earlier lesson or not. Right? What happens if you just continue to crash? Can it crash? Yes, it can happen. You just continue to crash. No, that's what happened during the Great Recession. Okay? Now, if you continue to crash, what happens? Right? Yeah, good. Everybody learning well. Very good. Okay, everybody learning well. After you fire all the shots, walk away. Walk away. Yeah, delete your broker app. Do something else. Go and take care of your face. Okay? Don't freaking look at the stock market. Right? Don't freaking look at the stock market. Especially men got this problem. Go and look at your wife. Go and look at other. Sorry, go and look at other girls. Go and look at movie star. Go and watch movie, Korean movie, see drama, whatever. Go and look at Yang Mi, Tili Repa, whatever. Just don't freaking look at the stock market after you fire. Don't look. I don't know how to repeat how many times. Everybody still look as if, wow, scared, frightened. Don't look, nothing will happen. Then some idiots will come and some idiot analysts will say, this crisis will be the worst crisis of all. More will come, minus 50. Then you know what they do? They sell in the hope that they will catch the minus 50%. Guess what? The market rebound. Or 99% this always happen. Okay? Let me repeat again. You will not be able to catch the lowest point. Everybody get to realize this. You will not be able to catch the lowest point. Okay? Yeah, you'll not be able to catch the lowest point. Yeah, play with the cat. Yeah, where's my cat? Okay? All right. Why this method makes sense, right? Because in some sense, you realize this like dollar cost averaging, guys. A lot of people say, I want to do dollar cost averaging. Why don't you do dollar cost averaging on the decline? Why must you do it on the rise? A lot. So this is really like a dollar cost averaging, right? So in some sense, as you buy, you will regret for sure. Surely you will regret now. You fire one shot, market just went down again. I should have waited. Then you fire another shot, it go down again. Okay, and then fire more shot, you go down. Every shot you fire, every shot you regret. But you know what? Your regret is distributed, okay, not concentrated. You always feel that I got some more dry powder in some sense, right? So I think that's where it's easier to tahan. So I need to say again, okay, minus 20 to 30% crashes are historically very rare, okay? So, and when it crash to 30% is where expected return are the highest. And that's where most of us chicken out. Yeah, it's just look too frightening, okay? Look too frightening. And I understand that. I've been there before, done that many times, okay? So this is called a spread out method. Now, everybody, okay, a spread out method. In some sense, it's like a dollar cost averaging down, but you dollar cost down, but you don't dollar cost up, in the sense that once you use up, you walk away. So it's not really dollar cost averaging, right? This dollar cost averaging, up or down, you buy. I don't care. I just buy on the way down, spread it out. I'll be frank with you. I learned this method by mistake, because years ago when I first was mentored by Mr. So Chin Hing, it's just nice that we encountered 2007 2008 crash. So I say how to buy. He said, why don't you spread out, go along the way, just spread out and things like. What he was meant is that, why don't you do dollar cost averaging? Because those days I don't quite understand the concept of dollar cost averaging. So I thought what he meant by spreading out is exactly what I did. Okay, spread out, use up and don't care. So I spread out and buy until no money already. No money, cannot do dollar cost averaging, right? Then you actually make money. Then I realize, oh wow, okay, yeah, it's okay. Okay, it's okay. Yeah. So by the way, your all question later asked, I finish this one first. So this method is actually quite easy to execute if you got your preparation work done. The error rate is quite low, and it's quite repeatable through all crashes. Very suitable for most investors. And you protect yourself from emotional instability. Women will execute this better than men. In a sense, on the last point, the women after firing will just walk away. Men, I don't know why. It's as difficult as asking them not to look at pretty women. I don't mind. Rather they look at pretty women than look at stock market non-stop. Okay, the downside is that it's very arbitrary. One big crash coming. Why you fire at -10? It's coming down fast and swift. Why -10? Okay, the economic signals are telling you go crash further. Okay, why buy negative? Maybe buy a -15 first lah. Why, right? And what if it fall too fast, right? Okay, and maybe you just couldn't react fast enough, and you don't catch around the bottom. You catch quite far away from the bottom. So this kind of a situation is more difficult to execute in that sense. If you have the desire to catch around the bottom and things like that, okay. But however, this method, okay, this method is easiest to execute and to my opinion, use the highest chance of success. Okay, yeah. Now it does not maximize return because you don't catch exactly the bottom, but it's okay. It's already catching around the bottom already, and that's totally fine. Okay, that's totally fine. Yeah. So the key is about okay. The key is about being patient. Being patient. Well, this is the wrong slide. Okay. Yeah. At least the slide is at the wrong place. Give me a minute now. Let me just shift this slide. Okay, let me just shift this slide to the right place. Oops. Never mind. Too difficult. Okay, so let's go. Okay, the second method is what I call a signal-based one. Wow, this one is skill-based. You need high conviction. This one you will read market signal, and when the market comes around the bottom, you fire much more. This one requires some skill of analysis. Okay, I do that quite a lot. Now, it's not 100% foolproof, but if you execute well, you can actually yield quite a lot of results. So the first method is called the spread out method, right? The spread out method, easy to execute, good returns, but not great returns. The second one is the skill method. Okay, in the skill method, what you actually do is I just wait, okay, and wait the signals to be clear. What I generally do is to look at history and look for a similar event, because history always repeat in some sense, and not 100% always, and see whether there's a chance for it to repeat again. If it does, then quickly. This one, I did it quite successfully in 2022. When I look at the great inflation of 2022 versus the great inflation of 1970s, okay, I found that 1981, sorry, 1981, the situation was strikingly similar. So very easy to align and then fire. And then of course you apply some economics theory. Like for example, the great crash of 2020, everything is like coming to an end. Remember COVID? Wow, a lot of people are dying. A lot of people, businesses are crashing, everything, and suddenly the Federal Reserve print money. Okay, that's where everybody is shocked. I also got a shock, and I was still trying to analyze and see what does that mean. Okay, fortunately, the rebound was not so fierce. Not like the Liberation Day. In one day, it went up 10%. The rebound took up, and I look at it, I was like, oh, wait, okay, this one resembles the printing of money of 2007 and 2008. Wow, okay, cannot miss this one. So I went in a bit late already. I went in May 2020, and in April 2020, the Fed already start printing money, okay? So, but however, that's okay. And that's where I just whack all the way in now. This one, a lot more difficult. I must tell you, a lot more difficult. Okay, a lot more difficult. But in the 2020 and 2022, when I caught the signal, I just everything in. I don't know, $500,000, $1 million went in. Just a lot. Just bam, 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 bam. And after that, go and live my life. So those who attend my course with Mr. So Chining, I actually show the chart. Right, in these two graphs, I just pump. Right, there's a small segment of investment, so very good. Right, so and the other one is if the signal is not clear, I don't want to do anything. Just walk away. That happens during the crash of this year in May. Too fast in April. Sorry, too fast in Liberation Day. Too fast, not clear. Don't do. I missed it. So be it. Never mind. Won't lose money. Missing is okay. Don't lose money. Right. Right. So anyway, so this method two is a lot more difficult because the signals are usually very noisy and timing windows are a lot narrow, and confirmation is can be very difficult, and you hesitate, you'll miss the window. So actually, between the two methods, I prefer method one. But in my opinion, actually, both methods are deployable together, right? So, of course, I'm a trained economist. I'm trained to read economic signals and policy response, but I don't think everybody should rely on this. Yes, in most of the YouTube live stream during crashes, I will talk a lot about it, and hopefully you watch it. But nowadays, MAS watches like a hawk, so I cannot talk too much. So I better tell everybody now when there's no crash. Okay, but during the crash, I tell everybody, people lose money, they complain MAS and things like that. Okay, already now got people, just make my life difficult. Okay, so actually, combine the two will be the best. Combine the two best. So what I would do is that in some sense, I actually combine the two. 2022, I actually combine the two. In the beginning, I start firing some shots, not too big, 50,000, 50,000. And then suddenly, when I saw this inflation start happening, when nobody saw it, at least nobody saw it in Singapore. Actually, I saw US analysts talk about it. Then went to analyze it. Wow, it happened. That was July 2022. That 1 month, I shot in $500,000. All went in. Then after that, I ran out of money. Okay, I ran out of money, and I think I stole some of my wife's money to bomb as well. But majority of my funds are all used up by then. Okay, so it's okay. Then after that, I went to live my life. Oh, that day I met someone in Mr. So Chining's course, and he came and tell me and said, "Thank you. In July 2022, you fired so many shots. I joined you, and I made a lot of money. Right? That's great, right? So combine two together will be the best, right? Now I didn't say combine two 50-50. If you are more comfortable with method one, then maybe you shift more to method one and shift less to method two. But if you're confident on method two, then shift less towards method one, more method. So it's very individual, right? Now, I don't have a hard and fast rule towards method one, method two. So in that sense, maybe a good start would be if you are confident, okay, if you are confident of method 1 that you can start with, maybe put more towards there lah. And then method 2 is when signals are clearer, and if you think that Mr. Lu give you a hint at the right time, you are confident with him, then you join him in firing or something like that, right? So that's another way of thinking about it. So no right or wrong, okay, no right or wrong. But I would suggest that learn how to walk before you learn how to fly, okay? Both method will make money, for sure, make a hell of money if you're able to execute it well, right? So in some sense, really, combining two will give you a best of both worlds, okay? Is that pretty clear on the method? So one is the spread out method, one is the signals method, okay? Now the more difficult one is there are other kinds of trigger, a lot other method lah, a lot. I'll just give you a few. Number one is there's this thing called time-based. So you spread out your capital, you decide that you have $100,000, you spread out over a period of 2 months and tell yourself, every 1 week I'll fire, every 1 week I'll fire, regardless what happens, just don't look, just firing, okay? That's one way as well. This one don't require much guts. Yeah, you just close your eyes and just fire, close and just fire. So this is one method. I don't like this method, it disregard the market ups and downs, but it works as well, okay? And the next one is a volatility trigger method. VIX, they look at the VIX index, okay, or some other volatility, fear and greed index, and they fire. I don't know how to read the index very well, and a lot of times the index create a lot of noise, okay? So I refuse to take that index really well, okay? So the next one is actually quite important. It's called a rebalancing method, right? By right, by right, you're supposed to hit a certain ratio, okay? By right, hit a certain ratio, right? For example, if you decide that the right mix for you is 60-40, but now you crash until let's say the other way around, right? So between bonds and stocks, you're supposed to have a ratio of 60-40. But now you crash the other way around, become 30-70. Then you're supposed to sell down your bonds and level up your stocks. This method actually does work, but it's too mathematical, very difficult. I use this method in my leverage investing. The one I passed it to Ben to do because the monitoring is too tough. I don't have time to do it. So this method does make money, but it requires too much mathematics. Although I'm quite mathematical, I don't have the time to make mathematical. Maybe AI now will help me be different. But anyway, I got a son right now that's very good in this. I passed it to do. Okay, I do use this, but I use this on a very niche market. Okay. But anyway, during the crash of 2025 this year, May, I exited quite a lot of my leverage position that I managed. I farmed it all out to a fund manager to do. So anyway, I outsourced the problem already. This year, they returned 20%. Very good. I cannot ask for more. Okay. Guys, continue to hit the thumbs up, please. I need you all to help me, please. Next is sentiment buying. When you look at fear in the market, everybody is talking about death, blood in the street, people commit suicide, whatever, the kind of thing. Then you buy the good in the stock market. This method very difficult. It's very judgmental, right? Okay, so very difficult as well. I mean that, but this one is something people like Warren Buffett would do. Okay, be fearful when other people are greedy, and be greedy when other people are fearful, right? So yeah. So it's really very difficult. And then the other one is some policy trigger. This one very difficult. So you have to analyze policies, both monetary policy and fiscal policy, and try to read the signal whatsoever. Wow, this one is damn difficult. So example of this is 2025. Donald Trump, how to read his signal. 1 minute he swing here, 1 minute he swing there, cause policy confusion, things like that. Then I realized, wow, just reading him was so difficult. Okay, so difficult. So I think these methods are supplementary method. Okay, if you have some spare cash, you can play with the stock market using the method, but I think these are very tough. Okay, so I'll probably use this method for triangulation, but not the core method of analysis. Okay. Yeah, so the error rate is very high on this method. So I share with you what other people do, but I don't think I like to do this. Okay, there are just too many false trigger, too many hesitation, okay, and too many interpretation and a chance for self-sabo. So actually the most important method is preparation. Preparation. Preparation is more important than execution. Okay. Preparation is more important than execution. So I would say that if you can get the preparation correct, chances are the crash buying is easy. Okay. If you don't get the preparation correct, I can tell you the most best kung fu of buying, you still miss it. You still miss it. So preparation is everything. Okay. So in conclusion, wealth is not created by catching every crash. Okay, it is created by staying patient, wait for 1, 2 years, 3 years, get yourself prepared, and when it comes, execute with emotional neutrality. Remember, I share everybody this word, emotional neutrality. That's the most important term that I want everybody to learn. Okay, emotional neutrality, and you can only reach emotional neutrality by being prepared. Okay, yeah, by being prepared. Okay, so this is where, okay, I will take questions right now, guys. Okay, and then yeah, I'll take questions right now. Okay, everybody, any question, please ask. Please continue to hit thumbs up. Okay, let me go back and look at some of your questions. Okay, let me see. Any reason why USD is still at 1.28 versus $1? Are you asking the USD should be falling or increasing? 1.28 is about stable, right? Okay. If the S&P 500 crash 20%, then year 2025 crash will wipe out. That is true. Okay. Can share for each decline how many percent of dry powder is going? It's very difficult. I would just say the under method one, the spread out method, then smaller proportion. Maybe you take out 5-10% and fire. But when you hit maybe minus 20, 25, then you whack in 30, 40, 50%, right? I don't touch precious metal. My wife touch it. More to buy for shock feeling. And trust me, she made a lot of money from buying, buying for jewelry purposes. Now she even buy one for me. I still don't know why I have to wear it now. Because I gotta use an AI device. No, don't have a black string. I don't want to use a black string. How do we determine when is 10% or 20%? You take the highest point, highest point, you minus down 10%, go in. Yeah. What if the market takes 15 years to recover? Okay, so have market crashed for a decade before? Yes, it has. Over the last 100 years, 3 times. Okay, so I'll just say this, right? Remember, I told you you need a financial safety net. Don't have financial safety net, don't touch the stock market. As simple as that. Don't touch the stock market. Okay, if you don't have financial safety net, don't touch the stock market, right? Is it we need to monitor the share on a daily basis to mark the reference point? No need now. You just look at Google Finance. They give you the highest point, lowest point already, right? But when the market start crashing the big way, then you monitor closely. After fire shots, quickly walk away, go and do some other thing. Okay. COVID, I think, went down by 25-30%, something like that. Okay. Is this time to fire? Guys, is this time to fire? Is this Audrey asked, is it time to fire? Is there a crash right now? Yeah. Okay. What if drop minus 10 to 15%, bounce back, haven't finished a hammer? Don't have, never mind. You miss the lowest, you miss firing, it's okay. You still got dry powder, use for next round. It's okay, right? You rather fire less than to miss firing at the bigger shots, right? Okay. Preparation and tahan ability is key. Cause anything happen, yes. Okay. Yeah. What other crashes as minus 20, 30? 2008 financial crisis. That one went by 50%, if I'm not wrong. Great Depression and a few others. Can't remember the rest. Yeah. 20% is more common. 30% very, very, very uncommon. Do you see 5 years period or year-to-date period for 15% crash? Sorry, I don't understand your question. Okay. Now S&P 500, 96928. How to calculate drop? So let's say tomorrow it start crashing, right? Then you just reference. So Janet, let's say it crashed to 5,000 points, let's say. Then you take 5,000 divided by 6928 minus 1. That's all. Okay. 5,000 divided by 6928 minus 1. Okay, put a percent to it. Zichen asked where to put our dry powder while waiting for big dip. I'll be frank with you, the best place to put OA, ordinary account. Why, guys? Okay, I taught you all in earlier lesson. You all don't watch my earlier lesson. Okay, every video that I publish, I'll put it up for 24 hours, then I'll delete it. So you all got to watch it very quickly. You missed it, too bad. Yeah, I don't have a choice. People are forcing hand to me, forcing me to delete. I don't have a choice. Okay, so you put into ordinary account through voluntary housing refund. That's the best place. Okay, you can put in money market fund as well. Okay, or you put into fixed D and T bills. But the more you put into restrictive places, then when a crash comes, you'll get locked up. So ordinary account is the best. Why? Because you got 2.5% and can deploy anytime. Yeah, that's what I feel. Okay. Let me drink. Okay. Realistically, how much money per month you think at your age need to live comfortably? No realistic. Everybody has different number. Some people 20,000 is too little. Some people $2,000 is enough. So there is no realistic number. Okay. If S&P 500 crash, will SGX crash? For sure. But what about the other way around? When S&P 500 increase, does the SGX shares also increase? I'll let people answer this question. Okay. Yeah. Yes. Can we use CPF or cash or both to fire? Yes. But NASDAQ, you cannot use CPF. NASDAQ, you have to use cash. Okay. There's some restriction there. As in, at the highest point you take from 5-year period, year to date. Highest point, highest point ever. Okay. Yes, I makan already. Thank you. Okay. At the dip, do you buy S&P 500 or buy FANG? No, I don't buy individual stock. I only buy broad-based index. Buy the whole market. Again, you all never watched my earlier video, guys. You all miss one video, you miss totally all the kung fu. Okay. Yeah, don't miss a single video. I publish, I watch it. You watch it within 24 hours. You missed it. Okay. You can use CPF for S&P 500. You can. NASDAQ, you can't. Okay. I think in Endowers, which I just want to proclaim, I do own a part of the company, a small share company. You can use, for example, a Mundi, US Prime. I think they are a S&P 500 copy or clone, and Lion Global also have some. Okay. Also, you can deploy the MSCI World Index, Dimensional Fund, whatsoever. Okay. I only deploy in broad-based index, not stock. I only deploy in broad. I do not buy individual stocks. Okay. Let me repeat again. I don't buy individual stocks. Okay. Yeah. How to tell the difference between financial market meltdown, okay, or normal crash? Well, financial meltdown, banks start crashing. Banks start crashing, different story. Okay. Yeah, banks start crashing. That's quite frightening. I'm talking about big banks, not some small, Silicon Valley bank, the kind. Okay. Should we buy S&P 500 first, then NASDAQ, or both at the same time? No right or wrong. I deploy 1/3, 2/3. That's what I do. Okay. I cannot tell what you should do. So sometimes NASDAQ, sometimes S&P. Look at your own portfolio. If you're underweighted by S&P 500, then you buy S&P 500. Underweighted by NASDAQ, then buy NASDAQ. CPF OA, can we sai lang, meaning that we use all to buy stocks, or is there a cap? How much you can buy? I think you need to keep $20,000. The rest you can buy. Okay, let me drink some water. Will gold price go up when S&P crash? It depends on the nature of the crash. I tell you, in my experience, when there is a massive crash, simisai malo, everything also drop. Everything also drop. Or rather, 99% of things will drop. Okay. Yeah. Will we be able to use AI to do a Lu index versus Adam Khoo index? I don't know what's the Adam Khoo index. I don't need. Guys, investment is not very sophisticated. Okay, investment is not very sophisticated. Now, are there people who make a hell lot of money? Yes, there are. There's so many, right? My method, I told you guys, I make 15% annualized rate of return, right? 15%. It's not as high as some guru, I don't know. Mr. Adam Khoo makes how much? I suppose he make a lot more. I'm not as good as him. But 15% to me is good enough already. Okay? 15% is very good already. Yeah, I already, right? I live a very simple life. I stay in HDB, drive a Honda, stay in Malaysia, eat simple food, very simple. 15% enough already, right? So, what do you think? After deploying capital, still have leftover after crash, didn't hit 30%. Wait for the next crash. Don't need to spend everything, right? Just wait for the next crash. Okay, next wait for here. It's perfectly okay. I told everybody in this video, it's okay to miss crash in part or in full. It's perfectly okay. Okay. PIMCO is more a bond company. It's more a bond company, less a stock company. Okay. S&P 500, you mean the code SPX? No, I didn't say that. Okay. Now, I cannot recommend individual stocks. But what you can do is you go to 1965 channel. All of you should subscribe to 1965 channel at a Telegram group. Okay. There, in the time, you quickly go and ask all these questions beforehand. There's a lot of community expert there will give you some advice. Okay. You just scan this QR code. Go and join the 1965 community. Okay, and for those people are watching on Facebook right now, please join us in our 1M65 YouTube channel. Okay, 1M65 YouTube channel. I don't know where I can find a QR code for my channel. Let me see where I can find. Okay, I cannot find a channel share QR code. Oh, yes, I found it. Okay. This is the 1M65, this channel that you're watching right now. Okay. Just scan this QR code and remember, hit subscribe and the bell. The bell is very important. Make sure you switch to all videos or live stream. Okay. Activate everything. Okay. So this, for those who are watching on Facebook, remember to hit this channel. For those who are watching now but never hit subscribe, please hit subscribe. Okay. When the day comes, you miss my alert, too bad. Okay. Yeah. So okay, so okay, thank you guys. Okay, I'm not humble lah. I'm not humble as in what is called humble. I mean, I do show off some things in life. Right? I show off myself slimming down. I show off my skin has gotten a lot better. I show my hair growing again. So by definition, I'm not humble. Okay, yeah. So I'm not really a humble person. Okay, but I stay in HDB. I stay in. I buy a 1.5 liter car. I'm going to renew my COE. Tama COE so expensive. Okay, I just feel that money is not well spent in these places. Okay. Can I afford a new car? Probably yes. I just think that money is not well spent now. Okay. Yeah, 15%, very, very good already. I find very, very good already. Okay. Do you think it's good to link CDP to Mumu? Okay. My personal opinion is I cannot tell you about other brokers. I like to choose a broker that I know is very reputable, very financially strong whatsoever. I don't like pick new companies. My children, one of them is a tiger, one is there a Mumu. I mean, there's a Mumu, meow meow tiger, and a kind of thing. Wow, wow. I'm just saying that I pick Standard Charter trading, most expensive but most reliable. Okay, IBKR I think is okay as well. Okay, I use Endowers because behind them is UOB Kay Hian, CBA, very stable, right? Okay, yeah. How do you pay US tax after selling? You don't need, right? You don't need. Okay. Everything is auto. Okay. Mr. Lu sharing is generous and easy to understand. You don't show any charts. People say I don't know anything because I don't show any chart. So, yeah. I actually think that to do well in stock market, you don't need to be very sophisticated. Don't need to analyze, don't need to pick stock, don't need anything. Very simple. When the market crash, just buy and walk away. I spend a lot of time taking care of my face, right? I spend a lot of time taking care of my hair, my body. Basket today, I don't have time to go for a walk. I missed my 15,000 steps today. Later, I'll go and catch up. Okay, but I very easy to just walk away. That's simple. let me see. What about HSB investment? I never used them before. I think HSB is okay. I'm a cat. I hope you don't the next 1MDB. So I don't understand what you're talking about. Okay. Who does Ben use for broker? I think he use Mumu. I think he use Mumu. Mumu got one advantage. Some of the US stocks, I don't know why Mumu never charge withholding tax. Okay. But other than that, I will never use Mumu Tiger. I won't. Okay. They use, I don't care. I won't myself. If crash never come, do you mobilize some dry powder while keeping aside? No, just leave in the bank. No, nowadays I don't leave in the bank. I deploy and lock them up because scam risk very high. I lock up every single cent, leave a bit for daily living. Yeah. Okay. Poems is okay, Endowers is okay, UOB Kay Hian is okay. Okay. Because Endowers fees are low and reliable. Okay. Yeah. Now they are $12 billion asset under management. So I kind of like them. And through Endowers, in the past, Endowers was the first one that you could use OA to buy S&P 500. That time, nobody else could do it. Now there are some people that do it. Okay. Yeah. Jian-Ming, thank you. Jian-Ming say, I feel that Mr. Lu teaches us very well and is very sincere in sharing and teaching us. I hope everybody cherish this and don't be rude to Mr. Lu. I tell you, there are a lot of people very rude. Okay, I'll just say this. I don't mind you have a different opinion, okay? But the minute you are rude, that's a different story. I just ban you. Why do I want to waste time on you, okay? So everybody, when they are rude, okay, I'll just ban them. Yeah. Willie, Mr. Lu, CPF can be considered a bond, but if you use CPF to buy broad-based index, is it still a bond? No. Then it's not ready. Then it became equities, okay? How to avoid estate duties if we invest in S&P 500 and NASDAQ? S&P is easier to avoid. You buy those iron domicile one. I think most of the Endowers one are iron domicile. Just double check with support and endowers.com or something like that. I can't remember what's their. NASDAQ more difficult. You can buy the Europe-based NASDAQ. The Europe-based NASDAQ, the European-based NASDAQ, ETFs are available, but I think you need interactive broker or something like that to buy. Okay. Anyway, I have this joke. I don't say in a big group like this. Those who attend my course always crack a joke how to avoid estate duties. Let's say if I die, what my children should do. Okay. Anyway, yeah. Any other questions, guys? I hit my time ready for everybody. So any other questions? Okay. Yep. Today is a freaking xiong day. Damn xiong day for me, man. Okay, yeah. It's a super xiong day for me. Wow, one of the xiongest day. I actually told myself I can't do this really. But I think a lot of people asking for it, so I try my best. Okay, I try my best a lot in life. Yeah, lucky I got ginseng power. Yeah, lucky I got ginseng. Without ginseng, I think very difficult. What is the percent of cash in your portfolio they recommend as your dry powder? Too much will be a problem. I actually never calculated how much cash. I never calculated. Yeah, just prepare money. Prepare as much as you can. Okay. Endowers charges 0.4% platform fee. Is it cheaper than SCB? SCB is actually what? One sell funds and one sell stocks. It's wrong to compare Endowers and SCB. SCB sell is a broker, sell individual stocks. But SCB got hidden fees. The exchange rate sucks. Okay. But bopian, they're very stable. If I put a lot of money there, my whole heirloom is there. I want to make sure it's a stable company. But that's just me, okay? How to evaluate between QQM and QQQ? You take a look at the fees. You take a look at the market cap, okay? I think these two will be the first gauge to go. Yeah. Why major bank crash is bad? Walao. If major bank were to crash, it would be a 2007, 2008 financial crisis all over again. What, that kind of crash take many years to recover, man. Okay. Yeah. Okay. Thank you, Jian-Ming. Okay. Thank you, Indigo, and thank you, Miss. I don't know how to pronounce the name. Sorry. Really, thank you too. Okay. So I'll keep this video for a very short while. Okay, and then I'll purge it. Okay. Let me quickly answer a few more questions. Mr. Lu, my OA low amount as used to pay mortgage. No chance to increase enough for investment. Only SA. Do not touch your SA. Your SA give you 4% return at 0% risk. There's zero risk. Don't touch your SA. That's a financial safety net. Again, everybody take note. Preparation is more important than execution. Is it worth to be a premier customer by big bank brokerage? I'm a OCBC premier customer. I don't see any advantage. I'm a Stanchart premier customer. I also don't see advantage. I don't have. Don't see. Where do you lock up your dry powder instead of bank? Money market funds and things like that. Okay. Thank you for imparting Kung Fu. You're very welcome. Okay. Now, this is where I ban people for making nonsense comment. Yes, thank you. Yeah. Okay. All right, good. Okay. Okay. If there are no more questions, okay. Oh, yeah, Ethan as well. Okay, Ethan. Okay. Ethan. The E is tilted the other way. Ethan. Okay, sorry. I don't want three terminis. No, no, allowed. Okay, good. Okay. Well, how safe are money market fund? Get the Fullerton one. Fullerton is by Temasek, if I'm not wrong. Okay. Yeah. Okay. I cannot tell you what you do. I know. I get some advice from AI. Get some advice from endowers. Okay. Don't take some advice from me. Because once you ask me to be very specific, I cannot recommend. Okay. HDB refund any entitlement to tax rebate? Nope. Okay. Yeah. Thank you for sharing. Okay. Yeah. Okay. All right. Good night, guys. Okay. Good night, guys. This is where I go for a walk. Okay. Good night, guys. I hope you find this. Is this lesson useful, guys? Would you like me to do another one? The one that is better also. I live my life. Okay. Is this lesson useful to everybody? Would you like to see a lesson 6? Okay. This is lesson 5. Would you like to see a lesson 6? If you find useful, I can develop a lesson 6. Lesson 6 will probably focus on signal-based crash buying, actually how to execute it. Okay, that one take a lot more preparation work. Yeah. Okay. Okay, guys. All right. If you find it useful, let me know. Okay. All right. Good. Okay. Good. Yeah. So, well, thank you so much. Okay. Thank you so much. Okay. Xiu Qing, thank you. Okay. Everybody, thank you. Thank you so much. Okay. So, I will see you maybe in a day or two. Okay. Yeah. Hui Bun. Wait. Which Hui Bun? My ex-colleague Hui Bun, or your just name is just called Hui Bun, Indiana Jones. Okay. Yeah. I have a ex-colleague called Hui Bun. I just don't know where is it. Okay. Thank you, guys. Okay, thank you, guys. I really appreciate this. Okay, thank you. I'm going for a walk now. Okay, thank you, guys. Thank you, guys. Okay, let me drink some water. Thank you, guys. Really appreciate this for your watching. Okay. Okay. Oh, not my ex-colleague. Sorry. Okay, but Hui Bun, Diana Jones. I'll try to remember. Please remind me again. Cannot remember all the names. Okay. Thank you, guys. Thank you, guys. Okay. I'll see you guys. Okay. Bye bye. Bye bye.